Building on to our gains, the Nifty is up about 25 odd points.
Right now, the Nifty seems like it wants to make a bit of a dash towards, the levels from where we started.
It is a bit of a mixed trading session, but largely a little bit of a positive bias.
If you look at where the Nifty is from the opening level, we're up just 20 points. That's it. The market, which is up 40 points, 18,756. So there's not very much by way of change.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for the day. Sensex and the Nifty end with marginal gains after a range-bound session. Mid-cap index remains in record territory even as financials underperform. Surprise rate cut by China and hopes of a stimulus package being considered later this week power up metal stocks. Mankind Pharma jumps over 6% on a positive commentary from IIFL and other brokerages. Zydus Life and Ipca Labs buzz after coming under the US FDA scanner. CDSL slips after BSE offloads nearly 5% stake. Tata Chemicals slides after cutting domestic soda ash prices for the second time in less than a month, while KEC International perks up on new order wins. Jubilant Group's founder Hari Bhartia says India has the potential to be the largest market for Domino's Pizza. Says India's consumption story is in districts and small towns. That's an exclusive. All right, well, those were all of the top stories for this evening. Here's a lineup of what we have in store for you. It's a packed show. In Market Opinion, we have Atul Suri, Chief Executive Officer at Marathon Trends PMS. In Big Corporate Voices, we have Hari Bhartia, founder and co-chairman at Jubilant Bhartia Group. All right, let's start with the first story and the market action. It was a range-bound session on the last trade. Sensex gained just under 100 points. Nifty gained around 40 points as it moves closer to record levels. Mid-cap index remains at record territory, even as financial stocks underperformed today. Prashant is here with a wrap.
By the end of it, things were absolutely flat, both for the Nifty and the Bank Nifty. The Nifty did a little better. Small gains. The Bank Nifty, not so much. The Nifty Bank is the one which is actually needs to be tracked more closely because it's been around that 20-day moving average, which is an important short-term closely watched level for the last couple of days. And today was no different again, as you can see. Broader markets, a little sort of less enthusiastic as compared to the 1% gains we are used to every day. Just under 0.25% or so on both the mid-cap and small-cap indices. Large caps and Tata Group stocks did very well across a range of companies there. So Tata Consumer, Tata Steel on the Nifty, which did very well. Grasim, JSW Steel and Power Grid were some of the others which stood out. In the broader markets, names like Mankind Pharma, broker after broker has been initiating coverage and stock rallied, has done very well from listing. I think it's about 45% higher. KEI Industries, the management was with us. They're doing capacity expansion. Markets like what they heard. V-Mart has been a huge underperformer. Came back into action today. Tata Coffee, Rain Industries, Shyam Metallics, Talbros, Aster DM, Galaxy Surfactants has also been an underperformer, which did well. Losers coming through in names like CDSL. There was a block deal there. BSE sold some shares. Zomato was a big volume-led loser. KPIT Tech has been selling off the last 2 days, down 10%. Lodha was another one which perked up in the last hour yesterday and gave back some today. Bandhan Bank, Keynes, Sona Comstar and HPL Power were some of the others. Some of them just sort of booking profits after the gains we've seen, like HPL Power. The FOMC decision is tonight. The consensus is expecting that the Fed will pause, but it will say that we keep the option open for future hikes in the as we go ahead in July, etc. Will that be so, or will we get a surprise? I think that will determine things when we come back tomorrow morning. Back to you.
Okay, all right, Prashant. Thanks very much for that. Well, stock markets are gaining across the world ahead of the US Fed rate decision later tonight. A CNBC survey shows 91% of market participants are expecting a status quo. Majority also expect the Fed to hold fire at least till November this year. CNBC's Steve Leisman is here with the Fed survey.
You have some surprising results, Joe, from the CNBC Fed survey. It showed our 33 respondents differ with the market and the market pricing in the Fed futures market. They're forecasting the Fed's course is none and done. That is no rate hike now and no more this cycle. I'll show you the top line results here. 91% of the respondents see no rate hike at this meeting. 6% do see a hike. 63% say the Fed won't hike in July either, with 34% forecasting a hike. That differs with the market, where there's like a 70% chance of a July hike. The funds rate peaks at 5.24. That's a bit higher than the current rate because some respondents do see that July hike. It raises the average. The Fed is then seen on hold at the peak rate for nearly 8 months. Here's how the rest of the year shapes up according to the survey. More than 80% see no change in September and November. 71% forecast no change in December, but a 26% minority, they are penciling in a cut. So all that white is no change on that board. That's how you understand that. Peter Boockvar, Chief Investment Officer at Bleakley Group, writes in, Jay Powell will talk tough at the presser after not hiking rates, but he's done with the rate hikes. Boockvar says credit tightening from the banks and decelerating housing inflation are going to keep the Fed on hold. One factor that could explain this difference between the survey respondents and the markets is concern about bank lending. Take a look here. 53% said they reduced their GDP forecast for this year because of tighter credit standards. 47% did not. The average reduction was 0.3 percentage points. Actually, that's a big number if you're talking about some of the low forecasts that are out there. Still, there are many who think the Fed should keep raising rates.
All right, so that's the big cue to watch out for. In market opinion, Atul Suri, Chief Executive Officer at Marathon Trends PMS, says that India is outperforming in the global market. He expects a 15% upside from current levels.
A lot of markets are almost breaking out of 52-week highs. Look at NASDAQ, that's driving. S&P 500, that's going there. Japan, doing pretty good. KOSPI, Taiwan. So there is a whole host of markets, and this is a repair of the damage done last year. And this is global in nature. You know, we had this feeling of outperformance very early in the year. But then after that, due to some events, the luster was lost. But the good part is that India has recovered. And it will again be one of the first few markets to break out to lifetime highs. And there's a lot of difference between lifetime highs and 52-week highs. Lifetime highs means that there are no resistances. There are blue skies. So I think that India is getting there. And I still feel that we have about a good 15% upside from where we are. The angst was a month ago was, hey, you know, this is just very limited to few stocks, few sectors driving. Hey, but look at today or look at last week. The breadth is really improving. And that's, I think, very important.
All right, well, on to the second headline now. Metal stocks fired up with the Nifty Metal Index closing over 2% higher. This is after China's central bank cut its short-term policy interest rates as a means to support economic recovery. Ben Cavender of China Market Research Group believes that though this move came as a surprise, it was in the right direction. He also added that India will benefit from the slowdown in China.
I think this was a very clear signal that the government recognizes that any kind of recovery that maybe happened through the first quarter has really kind of lost steam this quarter. And so more action needs to be taken. So this rate cut was definitely a surprise. It's probably a good step in the right direction, but I think, you know, at least the word on the ground here is this really isn't going to do much as far as moving the needle and getting consumers to spend. And it probably also doesn't do enough to help exporters in a really meaningful way lower their prices to the extent that they're going to be able to get more business for overseas orders. So I do think we'll probably see continued action by the government over the coming months. Having discussions with fund managers recently, I think very few are seeing a light at the end of the tunnel for China right now. They just don't want to deal with the political mess that China and the US are in. So they're absolutely pulling back. I think that's going to continue for a while. If you look at the brands and how they're investing, I think a lot of brands have sort of written off 2023 as kind of a lost year. So I think there will be some kind of recovery coming in China over the next 6 months, but it's really going to be driven by multinational brands, not so much by the investment community. And as far as where that investment community is moving money, I think absolutely, yes, India is going to be a beneficiary, probably some other Southeast Asian nations.
Okay, well, that was some opinion with regards to the global markets. Well, on to the third headline today into the pharma space. Mankind Pharma surged in trade after strong brokerage commentary from IIFL and Axis Capital, while Ipca Labs and Zydus came under the scanner after the US drug regulator conducted inspections. Let's in fact start with Mankind Pharma. Remember that we did have JP Morgan, which wrote on Mankind Pharma in yesterday's trading session, where they initiated with an overweight and a target price of 1,730 odd rupees. Today we have IIFL, which also initiated coverage with a buy target price of over 1,700 rupees. But they believe the valuation re-rating is largely captured. Stock performance from here on will be a function of factors such as consistent mid-teen EBITDA growth, volume outperformance, and ramp up of the chronic portfolio. Axis Cap also initiated coverage with a buy target price 1750, strong positioning in India's branded generic market, and the company is well positioned to outperform the IPM growth and improve margins. Well, that's on Mankind. Ipca Labs was in focus on account of the US FDA, in fact, issuing 11 observations for its Ratlam API manufacturing unit. Remember, this particular plant already has an import alert along with 2 other facilities, so a total of 3 facilities under the US FDA scanner since 2015. So the street is now a little wary and cautious because of the number of observations, because initially the optimism probably was from the fact that there could be a resolution on this facility, but with 11 observations, the street is now wary that it might take time to resolve. So that's on Ipca Labs. And we had Zydus, which was in focus because the US FDA inspected the group's injectable manufacturing facility in Ahmedabad, and they did manage to clear it quite successfully, considering that the US FDA has not issued any observations post the inspection. So those stocks were in focus in today's trading session. Well, let's move on now. Here is a story on the potential impact of the HDFC merger on mutual funds. Sources say that the market regulator SEBI is unlikely to make any relaxation on holding limits. Current rules limit the exposure for mutual fund to 10% of a company. Yash Jain is here with the details.
Well, Ekta, before we get into the details and what has transpired, let us just understand what the current regulations are. As per the SEBI regulations, any mutual fund, any particular scheme or any individual fund cannot have investments into one particular listed entity to the tune of more than 10% of its size. What we've been given to understand is that with the potential merger between HDFC and HDFC Bank, mutual fund schemes which essentially have investments in both these two separately listed entities, once the two entities could come together, then that investment could breach the limit of 10%. Because of this issue and its instance of cropping up, AMFI, which is the mutual funds representative body, reached out to market regulator SEBI, appraised the regulator on this particular issue and asked for an exemption when it comes to this particular limit of 10%. What we've been given to understand is that SEBI will consider this as a passive breach, and hence what will happen is that once this particular happens, whichever funds or schemes breach the limit of 10%, there a time period of about 30 days, according to our sources, will be given for them to sort of rebalance their particular fund or scheme and to comply with the 10% investment limit regulation which SEBI currently has. Post those 30 days, in case there are more funds and schemes where the compliance does not happen, then of course these mutual funds will have to apply to SEBI, appraising market regulator about individual situations based on which and the merits on which market regulator SEBI might look at giving them another 30 days for compliance. But of course no exemption, complete exemptions is expected to be given, but a time period for complying with that 10% limit on investments on individual funds and schemes is likely to come through as far as market regulator SEBI's stance is concerned.
Okay, all right, Yash, thanks very much for that. Time for a break now, but we'll be back with all of the other top stories. Stay tuned.
डायबिटीज कंट्रोल करने के लिए आपने इतने स्टेप्स उठाए।
नो थैंक्स।
तो हमने भी आपके लिए एक कदम बढ़ाया। बजाज अलियांज लाइफ इंश्योरेंस प्रेजेंट्स डायबिटिक टर्म प्लान, इंडियाज ओनली टर्म प्लान एक्सक्लूसिवली डिजाइन फॉर डायबिटिक्स। ये प्लान आपको हेल्दी लाइफस्टाइल अपनाने पर रिन्यूअल प्रीमियम्स पे रिडक्शन देता है।
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। मुश्किलों की नहीं सुनते अदानी, हम करके दिखाते हैं।
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
Great Place to Work India recognizes committed leadership, resilience, and for all mindset as the true mark of leaders who drive transformation for growth and impact. Join us as we honor such nation builders and for the first time ever recognize India's most trusted leaders. Great Place to Work India presents India's best employers among nation builders and India's most trusted leaders.
जिसको देखो दे रहे हैं लोन 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 और इसको उसको सबको चाहिए लोन लोन लोन
जो घर लेना हो ले ले लोन ले ले लोन गोल्ड लोन लेना हो ले ले लोन बिजनेस बढ़ाना हो ले ले लोन अरे लोन ये कौन सा है
कभी सही इंटरेस्ट तो बोल
कई छुपी शर्तों का झोल
अरे स्टॉप अब गोल गोल को छोड़ सुन सीधी बात के बोल अब हर सपना होगा पूरा जो तेरा है अधूरा और IIFL फाइनेंस पे है मेरा भरोसा पूरा गोल्ड से लेकर बिजनेस पर्सनल से लेकर होम हर जरूरत को मिलेगा लोन तो हुआ ना यही सही लोन IIFL फाइनेंस करता है सीधी बात
Welcome back. You're still tuned into Markets Today on CNBC TV 18. Well, on to the fourth headline. The Central Depository Services Limited stock fell in trade today after over 50 lakh shares worth nearly 560 crores rupees was offloaded. Nimish Shah joins in with the details on this story.
Well, in terms of seller, we know for sure that Bombay Stock Exchange has sold the 5% stake in CDSL today via block deal. In terms of buyers, I believe it's a combination of both the domestic funds, mutual funds, as well as some long-only funds, which include some hedge funds as well, who've participated in today's block deal. Now, BSE owns 20% stake in CDSL. They've sold 5% stake via block deal today. I understand they're going to retain the remaining 15% stake. Even this 5% was largely been sold to comply with some regulatory requirements, and hence they had to do this before October, and that's why the Bombay Stock Exchange has sold 5% stake in CDSL today. What is more interesting is this is the first sign of some bit of value unlocking which is going to happen in CDSL. If you look at the math, Bombay Stock Exchange current market cap is close to 5,600 crores, and the CDSL stake itself at these valuations is close to 2,000 crores. So, first tranche of 5% has been sold. Some bit of value unlocking has happened. I guess it's important for both CDSL as well as for Bombay Stock Exchange. For CDSL, some good buyers have bought into today's block deal, and for BSE, there is value unlocking happening now through part stake sale in CDSL.
Okay, all right, Nimish. Thanks very much for that. Well, KEC International gained over 1% after the company secured new orders worth over 1,300 crores across business segments. Vivek Iyer is here with more.
Well, that's right. So, the order inflow cheers continues as far as, the cap goods space is concerned. KEC International today updated the exchanges talking about they've received quite a few orders across various business segments. Over 1,370 crore orders is what they've actually received across various segments. Now, interestingly, in railways, they've got quite a bit chunk of the orders. They've got an order for automatic block signaling as well as overhead electrification. Along with that, in the civil segment, they've got orders for both residential as well as commercial building. They supply over there as well. And in the transmission and distribution space, they've got orders for now a 400 kilovolt transmission line as well as Star Supply as well as India and the USA. To give some context, at the end of FY23, KEC's order book stood at over 30,550 crore, and the order inflow last year was around 22,378 crore. So the order inflow cheer continues as far as KEC is concerned.
Okay, and moving on, thanks Vivek for that. Tata Chemicals tumbled over 2%. The company slashed its soda ash prices by 2,300 rupees per ton. This comes after the company's competitor Nirma revised its soda ash prices yesterday. Sonal Bhutra is here with more.
Thank you so much for that. Well, as expected, Tata Chemicals has also gone ahead. They've cut soda ash prices in the domestic markets, and it's a big cut, 2,300 rupees per ton. And this follows after Nirma cut its prices yesterday by 2,000 rupees per ton on soda ash. Now, remember, this is the third cut that has taken place just in Q1 FY24. And if you look at the levels on soda ash prices as well, it is the lowest that we've seen since February 2022. And there has been a consistent cut in soda ash prices in the last couple of months. Now, Centrum says that sharp price revision is expected to impact their realizations and EBITDA per ton in Q1, and this is despite some respite that has come on the cost side in terms of coal prices and power prices as well. Higher impact of lower soda ash realizations on margins will also be seen in Q2 of FY24, which is seasonally a weak quarter. So EBITDA pressure could continue for Tata Chemicals and GHCL as well, and that's why the stock is reacting to that news.
Okay, all right, Sonal, thanks very much. Well, IT stocks were under pressure on the back of a brokerage report by JP Morgan. The brokerage firm is expecting every IT company to report disappointing numbers in the first 2 quarters of FY24. They have also downgraded their rating on Persistent Systems. Sonia is here with more.
Well, there is a cautious view coming in from JP Morgan, and that's perhaps what's leading to this downtake or underperformance that IT stocks are seeing today. Persistent Systems is down 2.5%. As you rightly pointed out, JP Morgan has downgraded the stock to an underweight. Their target is well below the current market price, 4,100 on the stock. Now, they have also cut the earnings estimates for FY24 all the way up to FY26 by about 3% and 4% respectively. They say that the company has a higher exposure to discretionary spending, and discretionary projects are seeing a bit of a ramp down. There are some cancellations, some deferrals as well, and that could hit their earnings. In fact, for the entire sector, they expect all the IT companies under their coverage universe to face the heat in this year. They're placing Infosys, TCS, Emphasis on a negative catalyst watch. In the report, they also speak about how the demand has weakened further in the month of June. Deferred projects, cancellations and project halts persist. They also talk about how discretionary projects like apps, engineering, DX are seeing a bit of a slowdown. And the most important point in the report is that they say that all of CY23 could be a washout as opposed to their earlier projection of just the first half of the calendar year being a washout. So incremental bad news for the IT sector, and hence the stocks are under pressure.
Okay, all right, Sonia. Thanks very much for that. So that's on the entire IT space and Persistent Systems. Vodafone Idea surged in trade after reports suggested that the company was charting out its business revival plan. The company reportedly proposed a significant equity infusion of 14,000 crores. Aditya Birla Group and Vodafone Group PLC will invest 2,000 crores as fresh equity. This will add to the existing 5,000 crores that was pumped in by the promoters since the government's revival plan was announced in 2021. All right, on to the fifth headline today. India has the potential to be the largest market for Domino's. That's the word coming in from Hari Bhartia, founder and co-chairman at Jubilant Bhartia Group. Speaking to CNBC TV 18, Shireen Ban at the sidelines of the India Idea Summit in Washington, D.C., Bhartia said India's consumption story is on its districts and small towns. He also called India and US to collaborate more on regulations, especially when it comes to the pharma industry.
One reason of success is continuously bring value to the customer. If I look at our own journey in the last 10 years, I don't think we have actually increased prices, but what we have done is continuously leverage the scale to bring value. If you can give value, you will build scale. And today, it is the second largest in the world. When we started 25 years back, it looked quite difficult. The Indian consumption story is not in main cities only, in main large urban centers that we visit, but is now starting to see in district headquarters, in small towns. Consumers want great product, hygienic product, delivered at great value. So I think the scope is unlimited for US brands who are trying to enter India. Indian companies have set up huge capacities in India for supplying generics to US. Now, obviously, patient safety is topmost important. And now for that, compliance and quality is very, very critical. Now, I think it is important that the US FDA invest more on training people in India for building a resilient supply chain.
Okay, and on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.